Hey traders, Akil Stokes here, and welcome back to another Forex market preview video. December has arrived, meaning we're getting closer and closer to the end of our 2016 trading year. And the question that we always ask our clients are, what are you doing to prepare for 2017? And well, it's going to vary depending on who you are and where you're at in your trading journey. For some people, it means getting that back testing done, focusing on their education and trying to solidify what strategy or technique they want to trade for the new year. For others, they're looking at getting started in demo trading come 2017. And for some, they're making the jump from demo to live trading. And of course, for some of our advanced clients, those that have been around for a while, they're looking to grow their business as a trader. I got an email from one guy the other day who just passed his test for a prop firm, and he's looking forward to trading the fund's money in 2017 along with his own. And another trader that came through our program, man, was it four years ago maybe, he's been working for a hedge fund, and he's looking to branch out and manage money on his own as well. And I think that's a little bit of a longer process. He's got a 3-year plan in mind, but it's getting started right now. And that's kind of the point I want to bring you guys in this week's video, is that making change is good. Taking action is good. If you want to see some type of difference in your result, you need to take action. The key is you need to take action in the right way, and trying to rush through things, we call that putting a band-aid on it, a quick fix, is never the right way to do it. I always use an example of one of my first cars. I think the first car I bought, the first car I bought for myself was a 1994 Acura Integra, 2-door hatchback race car, a beauty. And like anything, cars eventually get old. And I remember throughout the years, as the car was starting to break down, as it became 10 years old, became 15 years old, I kept trying to throw these quick band-aids on it. I would take it to the garage and they'd fix this for $600. They'd fix this for $1,000. But 2 or 3 months later, a new problem would arise. And I spent so much money trying to put together these small fixes to gain another, 2-3 years out of the car, that as I look back on things, if I just would have, let the car go, if I just would have saved up that money that I took for these quick repairs, I would have had plenty of money to buy a new car. And, not a new car, but a new used car. And with trading, it's the same way. Many traders are looking to make that jump, saying, I want to pivot points didn't work this year, so in 2017, I'm going to have a fresh start. I'm going to go to Bollinger Bands. And I know this because I've done the same thing. I was that trader that had a system that I thought would work, didn't go about it the right way. And I would always say, I'm going to start fresh a month from now. I'm going to practice this for a month, start fresh. And then 2 months later, I'd fail at that strategy. And okay. In 2 months, June, in the summer, I'm going to start fresh with this. And I would go through that process of starting fresh and failing, then starting fresh and failing. And before I knew it, not only did I waste a lot of capital in the market, but years were going past and I wasted a lot of time. And that's why we put such a big emphasis on doing things the right way, not being in a rush to find that quick fix in your trading. Rather, take your time, plan it out. And sometimes that plan means a year, but plan out that process. Go through things the right way. Develop yourself as a trader, starting with the fundamentals, starting with the foundational elements, right? And then slowly build yourself into that good trader. If you do that the right way, you can go on to trade any strategy you want, and you won't take that time doing 1 step forward, 2 steps back, 1 step forward, 2 step back. And again, it's not going to be your quick fix. You're not going to be a consistently profitable trader in a month, but you're also not going to be that trader that keeps blowing accounts or keeps going backwards, keeps restarting, and before they know it, 5 years has passed and you're in the same situation you're at right now. So that's one of the main reasons we develop our training course in the way we do. It's not just, hey, learn this stuff. It's a 12-week course, guys. And each of the 12 weeks, we go through a specific process in a specific order, and it's meant for one step to build on the previous step. And what we're going to do in today's video is we're going to take a look at a price chart, and I'm going to show you how when you learn those steps in the right way, at first it may not look like much, but eventually it could become something very, very powerful for your trading. All right, traders, we're here on the Aussie dollar 1-day chart. And I want to kind of walk you through the process of sort of the different elements that we teach traders in our course and how they can, I guess one by one, they don't really seem like much, but when you put them all together, you can really make some magic with the price charts. And the first thing we do in module 1, we start off our course by talking about reading a price chart. How do we read a price chart? Do we know if the market's trending? Do we know if the market is in consolidation? Looking at new structure high and new structure low principles and really trying to figure out what direction the trend is going in. And that's something I do every day with my top-down analysis. For you guys that have seen me trade in the live room or see me trade in the syndicate, you guys know I always start with the higher time frame. I start with a bird's eye view of the market just to get an idea of what the bigger picture is. So looking at the Aussie dollar here, you can see that we've just been in consolidation. And consolidation is essentially sideways movement. There are 3 ways that the market can trend, guys. It can go, I guess there's 3 ways that the market can move. It can be in an uptrend, it could be in a downtrend, it could be in consolidation. And a quick way to look at that is if you see price action moving from the bottom left of your screen to the top right of your screen, that's typically an uptrend. If you see price action moving from the top left of your screen to the bottom right of your screen, that's typically a downtrend. That's a really simplified way of doing it for this video purposes. And if we're going sideways, kind of just left to right, as you see here on the chart, we call this consolidation. Now, if we zoom in a little bit, you'll see that the most recent move here was really a break of our consolidation. If you look at our lows right here, you can see we put in what's called a new structure low, a lower low, lower close. Now, this doesn't necessarily mean that we're in a bearish trend yet, but it's the first sign of a bearish trend potentially forming. I like to call this a bearish rotation. So if I had to choose a direction right here that I would favor in the market, it would certainly be bearish over bullish because of that most recent move. So again, that's week 1 stuff, guys, just learning how to read a price chart. And we can add stuff to that like Fibonacci. I know a lot of you guys love Fibonacci videos. If you go over to our website, tradeempowered.com, click that Learn to Trade tab, scroll down a little bit past all of the awesome free training that we offer. And there should be 2 really good videos on Fibonacci training, both for Fibonacci extensions and Fibonacci retracements. So if you guys are unfamiliar with that, but Fibonacci's are levels that we use in the market to kind of give us clues about where the market could potentially reverse. They're very psychological levels. If you want to get deep into it, Fibonacci exists everywhere in the world, from the reproduction of bunnies to the petals in a sunflower. It's pretty freaky stuff if you dig into it. It kind of messes with your mind. But for trading purposes, we use it on a price chart to help us predict levels of potential reversal. Now, if you don't know how to read a price chart, if you don't know how to read new structure highs and new structure lows and outside returns, then you cannot properly draw Fibonacci's from the right levels. Now, because I know this is a swing high to swing low, right? Because I know this is a swing high to swing low right in here. Let me make this easier for you. Because I know this is a swing high to swing low, and because I know this is a swing high to swing low, I know exactly where I can draw my Fibonacci levels from the correct way. And if I take my Fibonacci level from here, our swing high to swing low, boom, you'll see that I get a 50% retracement. Now, a 50% level isn't a Fibonacci number. I got a great comment on last week's video about that. This isn't technically a Fibonacci level, but 50% is a very psychological level. And we talk a lot in our training about even handle numbers. So numbers that end in 0, 0, numbers that end in 5, 0, 25, any level that is very comfortable for the human mind to recognize. It's very easy to multiply and divide by 5s and 10s. So we're typically, subconsciously even drawn to those levels. So that's why I put the 50% level on my Fibonacci tool. And we use it for other advanced pattern formations as well. But you can see I have a 50% level right here. If I take another Fibonacci and I draw it from this inside move, right? This smaller impulse leg, swing high to swing low, you'll see that I'm going to have an 886 line up with that Fibonacci retracement as well, or with that 50% level as well. So I have 2 Fibonacci levels at this same point. And that comes right at our outside return, so a previous level of structure. I actually should have done this first. But this is what happens when you don't plan these videos out and you kind of just do them off the top of your head. You get to it when you get to it. But we're looking at 2 Fibonacci levels coming right at that previous outside return here. Now, if I head over to my next Fibonacci tool, the Fibonacci extension tool, let me just clean this up a little bit for you guys. Let's get rid of, what is this? Let's get rid of the 886. Let's get rid of the 786, 618. Let's only keep the ones that matter. That way we have a nice clean chart and people don't get confused. 382, 50%, 618. There we go. Right there. If I take my Fibonacci extension tool this time and I draw it from this swing low to this swing high, and this is our outside return, right? Look at that. I have a 127 extension lining up at the exact same level. So 3 Fibonacci's, right? 2 Fibonacci retracement levels, 1 Fibonacci extension level, lining up in essentially the same place, lining up at an even handled number or a psychological number, right? 75/50s, and lining up right at previous structure looking left. So right now, at this point, we've been through kind of the first 2 weeks in our course. We've talked about how to read a price chart, how to identify trend and what the market is doing. We talked about new structure high, new structure low principles where you have these outside returns and impulse legs on here. We then go on and add Fibonacci retracements and Fibonacci extensions to that. The next step would be, say, adding harmonic moves, one-to-one measured moves. Many of you guys know it as ABCD patterns. So if we take a look at our most recent move up here, again, this outside return that we just drew our Fibonacci's from, right? I can label this A. I can label this B. I can label this retracement right here C. And if I put a D up here, watch what we can do here. I can copy and paste this leg or clone it since we're here on TradingView. I can clone this leg here, draw it on to our outside return there. And if I were looking for a one-to-one measured move, it's just another name for an ABCD pattern, a one-to-one measured move or an ABCD pattern would put us right in this same level, lining up with our previous level of structure, lining up with our Fibonacci confluence, right? Pretty cool. Now, if we skip a few weeks forward, we're gonna go past double tops and double bottoms. We'll go past 2618. We'll even go past CTS system, and we'll head over to I think it's week 6, where we start talking about advanced pattern formations. If you look at this, right, to a newer trader, this probably looks like nothing at all. A bunch of lines on a chart. Okay, we just learned that there's Fibonacci's there. We just learned that there's an ABCD pattern there. But when you put it all together, this type of formation on the chart is actually an advanced pattern formation. If I do something like this, you will see exactly what I mean. A potential Gartley formation. This is called an advanced Gartley formation. And I did it step by step like that because I want you guys to see this, that there are so many traders out there that are fans of advanced pattern formations. That's one of the most popular strategies that we trade. And typically a lot of our newer clients flock to those first because they're very easy. They're not very easy, but they're very easy on the psychological end of things, meaning that the rules for trading these are black and white. When you start to trade price action and structure and some of those other methods, it can get real subjective sometimes, just because different eyes are going to see different things. And there is a fair amount of subjectivity in advanced pattern formations as well. But typically the rules are cut and dry, meaning a B leg has to be here. If it is here, then it is valid. If it is there, then it is not valid. A C leg has to hit this Fibonacci level. If it hits this Fibonacci level, then it is valid. If it does not hit this Fibonacci level, then it is not valid. So it's really simple for a trader to say this is a valid pattern or not a valid pattern just by referring to the rules. But the point is, a lot of traders try to rush into this and don't get it right. And I get so many charts a week from traders saying, "Hey, Akil, check out this Gartley formation I found." And I'm looking at it and I'm like, this is so bad. No, you're so wrong. This is not it at all. Either the Fibonacci's are drawn from the wrong level, or they're not measuring an impulse leg. They're starting their X to A from a random spot, and I ask myself, how do traders get it this bad? How did they get it this bad? And the answer is they never work through the initial steps of learning how to read a price chart. They never take the time to learn how to read and identify new structure highs and new structure lows, outside returns, impulse legs, anchor legs. They never learn that. Therefore, when they go on to the advanced stuff, they get it wrong from the beginning. And it always frustrates me. Start at the basics. And that's again, one of the reasons we teach things and go through the process the way we do. But again, trading is a process, guys. And when you put it all together, you end up finding trading opportunities that you didn't know exist. And the light bulb goes off when you're able to get to those midweeks in the course and start to see that, wow, I've been doing this the whole time. And now I'm able to put it into an actual trading opportunity. So this is a valid bearish Gartley formation here on Aussie dollar daily. So this is something that's on our radar. We'll be watching to look for a short position here. But I just want to walk you through kind of the step-by-step process that we go through in teaching our traders how to break down a price chart, and really emphasize the importance of doing things the right way and not skipping the boring foundational stuff. That stuff ends up being really the most important part of your trading, no matter what strategies or techniques or even systems you plan on developing or trading in the future. The main thing that I want you to understand from this video is that trading is a process, and it's a long process that takes time. Yes, you can have all the stuff you see on the internet where you can drive fast cars and wine and dine the wife and kids, go on exotic vacations and buy massive homes. Yes, that is achievable, but the reality is 90% of traders never reach that level. It's a very high failure rate here in the Forex market. And the reason isn't because traders aren't smart enough or they're not skilled enough, but it's that everyone is looking for that quick fix. No one wants to put in the work necessary to find success. And if you want to be a successful trader, it takes a lot of hard work. It takes a lot of discipline, a lot of frustration. It takes a lot of long nights away from the wife and kid, long nights in front of the charts, wrecking your mind, trying to figure out what's not working and how to go about fixing it. And that's a very stressful process. But for those who are willing to dedicate themselves, for those who take massive action, you can work through that process and find the glory that you want on the other side. And that's something that we've been doing with traders here at Trade Empowered for years now. For serious traders that are tired of seeing the same results, they're tired of consistently bouncing back and forward, a little bit of profitability here, but then blowing their account there, a little bit more profitability here and blowing account there. We work with those traders and helping them achieve their goals. And if you guys are interested in something like that, I would recommend checking out our 12-week transformation course. I'll throw in a link underneath this video. I'm not going to make this a plug, but you can watch the link. It's a video walkthrough explaining exactly what's offered in that course. But if you're serious about trading, guys, you need to do something different. The way I see it, you have two choices. You can either continue doing what you're doing and find yourself in the same exact position next year, a little bit lighter in the pocketbook and a little bit older. Or you can decide, hey, I'm serious about trading. I really want to make something out of this and take massive action. Invest in yourself by investing in your education. And that's something that I fought off for a little bit in my career. I kind of was really stubborn and wanted to do it all by myself. But I got tired of losing money, and I saw the years go by and I wasn't making any progress. And I said, hey, I'm going to do something different. I'm going to take this seriously. And it's funny. Once I actually put some money into my education, I took trading a lot more seriously than I did beforehand. It was kind of like a hobby to me at first, but as soon as I threw some money into training, I said, hey, if I'm going to put this money into something, I'm damn sure going to get the most out of it. And that was kind of the kick in the rear I needed to turn my career around. So if you're interested in something like that, again, you can watch the video in the link below on this YouTube video, or you can always shoot me an email and we can talk about different educational services out there and kind of figure out what you need to turn that corner in your trading. But But until next time, guys, plan your trade, trade your plan. Thank you for joining me for this video each and every week. Thank all of you guys that comment and share and like. Each time you do something like that, it helps us out massively in spreading the word and kind of growing this YouTube channel here at Trade Empowered and growing this community. And, we're always appreciative when you guys do that. So I'll see you guys next week. Until then, take care and enjoy your weekend.